Hello, everyone, and welcome to today's episode. I haven't made any videos for a while. I haven't been doing as much trading. Last week with earnings, I think I made a couple of trades on maybe Monday and Tuesday, whatever it was. It was just really hard to trade, and it just things weren't. My setups just weren't working, so I said, you know what, I'm just going to sit out. Yesterday, with the big drop we had, the volatility was so high that premiums were really inflated, so I didn't trade yesterday at all. Um, One contract at the money was like $6 or something for the typical stocks that I trade. Um, I don't like going into. I don't like spending $6 on a contract for anything. I just for my risk management purposes, my comfort. I don't like going in. I like staying under $2, maybe slightly over $2, but I like to stay under $2 for my contracts. But anyway, so I really haven't been doing a lot of trading lately. I was kind of waiting for earnings season to settle down. But I like the setup today that I saw in SPY, and I hadn't been trading SPY for a while, but I like the setup. I got in. I kind of thought that we might have found the bottom, and maybe it was getting ready to bounce. I got in at 13:01, which is 1:01 p.m. today. I got in calls. Show you where I got in at and tell you why I got in. Just try to see some of this stuff back here. All right. I could probably, I could probably narrow this up a little bit to help. Okay. So at 101, you see right here we made a higher low here, and then we kind of double bottomed right here, and we had two bullish engulfing candles. We also had a 50% Fibonacci from yesterday's. If you use yesterday's chart, highs and lows from yesterday, the 50% retracement was right here. So we were kind of holding that 50%. We had a double bottom, made a higher low, and we had two bullish engulfing candles. So I got in at 101. I actually put my order in. I think it was somewhere in this candle here. It took a few minutes to fill, so I got filled right after the open of this candle. I don't think I was ever negative on this trade. I think from as soon as I got in, I may have been down 0.02% or something when I first got in, but from the time I got in, it went straight up, and I like those. Those are nice. But I got in here. I paid what I paid, $1.14 each. The problem is I only bought two contracts because I was planning on holding this, and if you look, I usually buy pretty close expirations. These were actually August 12th. These are next Mondays. I bought myself a little bit of time because I was planning on holding them overnight, or at least holding one overnight. I was looking to maybe sell one, hold one overnight, and see what happened. Kind of almost as I don't want to call it a lotto because I'm pretty sure that we bounce from here. If not a reversal, at least a bounce for a day or two before we go back down. But I think we at least have today and probably tomorrow to bounce at a minimum. So my plan was to sell one today and hold one overnight, but I was up 50% on that second one, and I couldn't let 50% go. So I only got two contracts. Normally at $1.14, I probably would have had four contracts, which still isn't a huge amount, but I like to play a little more conservative. So you see, we're up 420 points today on the Dow futures. I just think that I thought we would either consolidate today or bounce. To be honest with you, I probably would have rather seen a little bit more consolidation. because I think once we get the consolidation, then we'll reverse. We did consolidate a little bit this morning, and I thought that would be at least good for a short-term bounce. So anyway, I exited the first one at 146, and no real reason for that exit other than I was up a decent amount on it. Where was it? 1346. Right after this candle opened. I was trying to hold it to this fib retracement, but I was up, I think it was 20% on this one, 22%. So I went ahead and put a sell order in, and it triggered it, and I held the second one. So on the first contract I sold 136 minus my 114. I made 19.2% on that one, which is nothing to be ashamed about. I'll take 19% on any trade. But yeah, I let the one go. What was it, right here? And I was looking to sell up here. In a way, it's probably a good thing I didn't, because we didn't quite make it there before we pulled back. But then again, look where we ended up. So maybe my stop would have been down here, but when I initially got in, my stop would have been closed below this level here. But since I was up 20%, I wouldn't let that go red. I would have sold. I think I would have probably had my stop maybe below yesterday's or today's open, which is right here. This line here represents today's open. So I don't think I would have let it go below this. If I would have hit that, I probably would have sold out. Wouldn't have made much, few bucks, but it's better than going red. And with the way the markets have been, I wouldn't want to take a chance. I didn't even plan on trading today, but like I said, I like this setup. I liked what I saw. We also had, I got in at, what was it, 101 right here. I was pretty sure if we popped above this high here, which was this candle, and then got above this one, I thought we'd be in for a nice close, or at least a nice rest of the day. Because after that, we were looking at up here, and that would have been a real nice trade. But this is the line that I was looking at for an exit, and I was up. Let me see where I sold the second one at. 222. So I sold the second one right about here. I was gonna sell it here, and I liked that we bounced off of here and had a couple of big candles. So I thought, well, let me hold it and see what happens. And I sold it at 222, which was right after the open of this candle. And the only reason was because we had a red candle with a long wick. This isn't necessarily a bearish candle, but it requires confirmation. But I was up, I think, 40% at that point on the second contract, and I was happy with that. And I thought, I'm just going to go ahead and take my profits and get out. So you look at the second contract, 163, 114. I made 42% on the second contract. Overall, I made 31% on the trade. So you look at it, 163 plus 136 divided by 2. So my average was $1.49.5. Figure $1.50 for my exit. 149.5 minus my 114 entry divided by my 114 entry. 31.14%. So I made 31%. I mean, you look at it, I made $70 on a $228 trade. There's nothing wrong with that at all. But like I said, I like this setup that I saw. I like the fact that also right here, and this wasn't my play, This wasn't the reason I was getting in, but I liked the fact that we were going to get a 921 cross right here. We're looking at a 921 cross right after my entry, so I knew if we broke that, I was probably not going to be able to. I probably wouldn't be losing money on this trade. So that's kind of why I looked at it. I mean, there's nothing to say that it couldn't have came up here and then pulled back again. But with everything I saw here, the double bottom here, it's actually closer to quadruple bottom because we had one here, one here, one here, and one here. So it's actually closer to actually the fifth one here. So there was pretty heavy support there. We had two bullish engulfing candles here, and we had higher low. With all that, I really liked the setup. Liked what I saw and thought it was a good risk reward, so I took it. I would have liked to have. I would have probably played Friday's expiration normally, and actually SPY the way I'd been trading SPY. I haven't traded SPY for a while, but the way I'd been trading SPY, I would have been trading tomorrow's expiration. But I had planned on keeping it overnight, and I don't like holding current weeklies overnight. I was going to go with next week's or next Wednesday's expiration, but the premiums are a little higher than I would like to hold overnight. If I was planning on it being a day trade, then I would have been okay paying those premiums. But I didn't want to pay. I think they were like, I don't know, $2.50 a piece, $2.80 a piece, something like that. I just don't want to risk that much on an overnight hold with the way things have been going lately. So I went with the cheaper contracts and had planned on selling one of them before the close. And to be honest with you, I was figuring I'd be happy if I made $40 on it overnight. As it turns out, I made almost double that and didn't have to hold it overnight. So, I don't have any problems with letting it go, even though my plan was to hold them. But profit's profit, and I'm going to take it. If I wake up tomorrow and we're up another 500 points, and maybe I could have made 200% if I held them overnight. Oh well, I'm okay with that. Hopefully somebody else did it, and let them make the money. I'm okay with that. I'm never going to be upset about making money. So, I made 70. Maybe I could possibly make 250, but maybe I could possibly lose 250 if I hold them overnight. So, I'm okay with taking my money before the close. So, that's it for today's trade. That's the only trade I made today. I still don't like the elevated premiums, but it's kind of what happens with this volatility. I'll also add I added another screen last week, so now I have 3 monitors on this computer, and I have 2 on my other computer. So right now, a total of 5 monitors. I added a 24-inch monitor. It's above my 2 23-inch monitors. So this screen here now, let me pull it down here. This screen here used to be on the monitor on my left, and it's the same monitor that I had my trade orders in on, which is this. And once I was in a trade, I would have this screen up, and I couldn't see this screen. I like to be able to see this screen because let's say I'm in Apple, and I'm in Apple calls, and I see all these are all starting to go red, but maybe Apple's still green. I know something's happening, and I can get out. But if I have this screen over top of this one, I can't see what else is happening with other major tickers. So I added a third screen, and I have this one on it. It's above the other two in a picture of a triangle with two monitors on the bottom, one on top. This one here is the screen on top. So now I can have that one on top, and I really don't need to. It doesn't really. I have to scroll over here. It's set up like it's the third screen beside this one, but I don't really have to go up there. And all that I do with that screen, really, once it's set up in the morning, I just look at it. I don't really have to go up and click on anything on it, so it doesn't really affect my mouse movement because I don't really click anything up there. So other than in the morning when I'm setting it up, and it's the same stocks that I leave these same 6 on here every time. And actually for SPY, I should probably have the Qs up here because these are all part of NASDAQ. All the stocks I'm watching here, Boeing, I'm not sure what Boeing is. I don't know if it's NASDAQ or the Dow. But anyway, everything I'm watching is NASDAQ, but I have the SPY up here. So I should probably have the Qs up here. But anyway, yeah, I have Apple, Netflix, Boeing, Roku, and Nvidia. I used to hate trading Boeing. I don't know until recently that I really made money on Boeing ever. But I noticed that that Boeing really likes the 921 EMA cross a lot. And it doesn't have to be 921. It can be anything, similar. You could have, maybe a 1024 or 616. Right here, the pop to the upside, no, that wouldn't have worked. But the one to the downside here, this blue spike indicates 921 cross. That would have played out really well. Right here to the upside would have played out well. And I don't even really look at them after 11 o'clock in the morning, except for today. Now you see this one here would have played out well. This one here, even though it didn't play out initially, it would have eventually, because it climbed back to here. Because if you would have entered on this cross, you would have got in at the open of this candle. Your stop should have been below this, and you never did go below that. So you could have held till up here and still made money. So it wouldn't have been a great one, but now this one here, you probably would have lost money on. You probably could have made a couple of percent, but you probably wouldn't have sold there. I don't know. I think with this one, if I was going to trade this cross to the downside, I would have had to wait till we broke below this low on this cross. This one here, nice cross there. The Boeing seems to really like these crosses, these EMA crosses, and that's why I started watching it. Since I started trading Boeing on EMA crosses, I've actually been doing pretty good on it. I've traded it quite a bit lately, and I've made money on most of those. Only a couple of losers on it. So that's pretty much it. Like I said, I added a third monitor. Eventually I want to buy a new computer and put a couple of extra monitors, but for now I have enough. I have 3 on this one and 2 on my other one. My other laptop, I have my paper trade account up, and I have charts set on it, and it's real time, so I can use it for charting also. And my laptop screen for that 2 monitor setup, I have my the ramp up trading chat room up on that, and I just watch what goes on through there. I haven't been following their trades much lately. They did note. Rock did get in the SPY at 130. No, I'm sorry. Let me go back and look. Let me see what time it was when he got in. He got in at noon. So he got in at noon. So he got in way back here, and I don't know what I wasn't paying that much attention to what he was doing. So I don't know, but he got in about here. This candle. I haven't been following. I haven't been mirroring what he does in there. I've been doing my own trades. So I got in. He got in right at the open of this candle, which looked like a good entry. There's a lot of congestion up here. I just didn't, just because of the time of day. I just wasn't comfortable with getting in there right here. I don't know if he was anticipating this cross working. Either way, it worked out. He sold, made money. I don't know what his percentages were. He doesn't say what he pays for his contracts or how much he sells them for. So I don't know how much he made. I do know he sold along the way on the way up here. So I know he made money on it. Me, I didn't get into over, what was it, right here, this candle, I think. I got in like an hour after he did. I just like the setup better. I don't like mirroring people. If I mirror somebody, I don't usually know why they're getting in or why they would get out. If you don't know why they're getting in, you don't know why you should get out, because you don't know you don't know what their theory is or their basis is on getting in. So how do you know when that entry is broken, when that chart's broken, if you don't know what they're looking at? When you're mirroring, the best you can do, unless they're going to explain it to you why they're in, the best you can do is just get in and buy when they buy, sell when they sell. But sometimes when they sell, they might sell right when it starts to reverse. By the time they get the alert out, it's down another 10%. Now you lose money. The other issue is they might buy 10 contracts, and you might have a small account and you only bought 2. They bought 10 contracts, maybe they sell 7 when they're up 20%, and they still have 3 contracts and they ride it up higher. Well, if you have 2 contracts and you sell one, say it when they're up 20%, you only have 1 left. Maybe they sell another contract when they're up 30%, they have 2 left. They can let those 2 ride all the way back down to break even, and they're still going to make money. You let it ride down to break even, you cut your profits down to, if you sold half at 20, your profit's only 10%, where they might have made 25% because they sold so much of them up higher. So it's hard to mirror somebody. Even if you get the exact entries and exits as they do, they might have more contracts and they might scale out along the way so that they're reducing their risk when you can't do that, so you're not reducing risk. If it turns against them, they can sell the last few they have left and still make money, where you're still in it half of your trade and the math doesn't work. So I like to enter my own trades. I don't like to mirror. But anyway, that's enough for today. I've been watching these 921 EMA crosses. I might play around with that a little bit. See if I can fine tune it a little bit more, but they've been working out pretty good for me lately. Today's trade wasn't a 921 trade, although it looks like it was because it did cross right after that, but my entry was actually before this candle closed, before the close of this candle, so the 921 hadn't quite crossed yet. But I've also noticed a couple other things that I'm kind of working on, and I'll just mention it here real quick. I haven't implemented it or really tested it much. You know what? I don't want to mention it yet because it might be premature, and I don't want to get people on the wrong trail and have people start following this thing that I haven't really verified yet. But it's basically something to kind of help you see when the trend is over. Not when the trend is over. When the run is over. When it's time to get out. It's I guess you can't really use stochastics, because if you look here, the stochastics peaked at this candle. Not really peaked, but they crossed. I think the peak of the stochastics was this candle here. If you go over to here, when the stochastics turned down below here, you would have exited way down here, or probably right here, which is, you still would have made money, but it wouldn't have been that good of an exit. But there's something else I kind of found that Looks like it might be a little bit better for telling you when you kind of lost your when your momentum's peaked, when it's just about to turn. And it actually, from what I've seen so far, it looks like it kind of it tells you like right before it reverses on you, right. And it doesn't it's not 100%, nothing's 100%, but right before it reverses you'll see the signal to know to get out. And I haven't tested it enough. I don't even have the chart or the indicator up on my screen here, so it's obviously that I'm not using it yet. But anyway, I don't want to keep this. I don't want to make this too long, but maybe I'll talk about it more in the next video. But like I said, sorry I haven't been making videos. I haven't really been doing any trading, just because of the way the market's been, and I'm too risk adverse and too conservative. I don't want to jump into stuff when the market's the way it is. Sure, you can make a lot of money real fast, but you can lose a lot real fast too, and I don't like losing money. So I'd rather not make any money than to have a 50-50 chance at losing money. So just sit on my hands, and I've had other stuff going on too, work-wise, and so I've been too busy focusing on other things to be able to pay much attention to the charts. So it's not all because of the way the market's been. There's outside factors, but things should be back to normal. So we'll see how tomorrow goes. Maybe I'll do some playing around with that other thing I was talking about, and see how it looks, and back test it, and maybe talk about that in my next video. All right, thanks. Bye.